What's going on? What's going on, team? Welcome back to another week. Welcome back to another Money Monday. Welcome back to the channel. If you guys are new here, consider subscribing. If you guys enjoy this video or get any value out of the content that we're going to be talking about, make sure to smash that like button, share it with a friend, and let's jump right on into it. So the first thing we're going to be talking about, as usual, we talk about the SPY, and then we talk about the NASDAQ, and then we're going to be talking about 5 opportunities for this week, 5 or 6 opportunities this week that you guys should be paying attention to. Add to your watch list. The team has gotten these opportunities on Sunday night, so if you guys aren't on the team, consider joining the team. There's a link in the description to join the team, and let's get right on into it. The first thing we're going to talk about is the SPY. So this is the SPY we have on the chart right now. So let's go ahead and zoom out. The first thing we're going to talk about is last week we talked about us breaking back into the channel that we've been trading in since the beginning of the year. Currently, we did post all-time highs, and it looks like based on the MACD and RSI, we are starting to turn around and make our way down to the bottom. So the first thing I would say is we are going towards the 50-day moving average, but I'm assuming we're either going to bounce either on the 50-day moving average, or we're going to test this bottom channel trend line before making moves to new all-time highs or correcting even further. So we're seeing the 180-day curve to the upside. We're also seeing the 200-day curve to the upside. We do have some room to run before we get to the bottom of the oversold territory here on the RSI. The MACD, once again, we did see a change of color from green to purple, which indicates to us that momentum is dying off, and we're potentially going to start, trickling a little bit to the downside before we continue higher. If you can see, we've obviously gained pretty much 5.8% in the last few weeks, just recovering here on the S&P 500. So that's what's going on with the S&P 500, the NASDAQ /NQ. Taking a look at that, we pretty much posted the same exact thing. We've been recovering, posted about 8.34% of a recovery on the NASDAQ. Same setup, new all-time highs. We are looking a little overbought here on the RSI. MACD change of color. We're starting to turn to the downside, so I wouldn't be surprised to see a bit of a correction. One thing I wanted to touch on before we jumped into the opportunities is Tesla. So last week we talked about Tesla, and we talked about the fact that it might actually start correcting, but looks like we didn't start correcting just yet, and we are starting to push higher and higher. That being said, I do want to put this out there. I want to say that, although we talked about it dropping and correcting, I do still believe we're in for a correction. Going back to what we said last week, we're looking at the daily chart, and we're looking at this gap right here. We still haven't filled this gap from 911 to 948. So I do expect us to drop back down, get this gap covered before we continue higher. And that being said, that's just on the daily chart, and that's just talking about the gap. Now, let's bring up the fact that we are way past the +3 standard deviation, and we don't hang around that spot or that price level for too long before we come back down. So if you guys don't know what the standard deviation levels are, make sure to go on Google if you guys aren't part of the team, and type in standard deviations for the stock market, and it's going to show you it's going to be a bit of a bell curve chart showing you how long, how percentage wise, how long prices stay at certain levels on the standard deviation chart. If you guys are part of the team, it is available in the resources channel, so you guys can go into the resources and scroll up. It should be probably a few months ago that I posted about this. So you guys can see that chart there. So we are way past the +3 standard deviation level, and it looks like we're probably around 4. We can add this to the chart right now. Let's go ahead and do that. That way we can actually know for sure. We don't often get, something jumping up to +4 standard deviation level. So it is a bit of a new thing for us to see, especially on Tesla. So let's go ahead and check that out. We're going to go ahead and edit this. Change this to 4. So if you guys don't know, this is a bit of a giveaway for you guys as to how to add standard deviations on TD Ameritrade. So we typed in 4 for that to be 4 standard deviation. Click OK, apply, OK. And yeah, we are even past 4 standard deviation. So that is the 4 standard deviation line. And we're just above that. So we're probably at about 4.5 standard deviation. So I wouldn't be surprised. Personally, I would not be looking to get in on Tesla for the long side at these price levels, just because it has jumped up fairly quickly, right? So I'm looking more so, I'm watching Tesla more so for the downside and to play the short on Tesla right now, just for it to correct. I'm not saying it's not going to go higher in the future. However, as of right now, I don't think this is a sustainable rate at which the price is growing and increasing, right? So I wouldn't be, if I were you and I was not in Tesla right now, I would not personally, this is just my opinion, I would not be jumping into Tesla at 1224. So that's kind of what's going on with Tesla. Definitely super overbought here on the RSI. MACD, we haven't started seeing a change of color, but I believe that once we do, it's going to be very sharp, just because this increase is, like I said, unsustainable, right? So that's what's going on with Tesla. And let's go ahead and jump right into the opportunities that we're looking at. The first one is going to be Starbucks, SBUX. So we looked at Starbucks on Sunday night. This one was down. Today, we ended up just in one day. The team already knew about this, but just in one day, we ended up gaining 3.39% on Monday. We did break above this support level. We do have a critical volume profile level here at 111. As far as the RSI goes, we do still have plenty of room to run. We did just now signal a change of direction and momentum here on the MACD. We changed it from orange to green. And so I do believe that we do still have some room to run until we get up until at least the 180-day moving average, which is another 3.46%. So if you guys were on the team, there was an opportunity here for 6%. I'm not saying that it's going to stop at the 180-day moving average. It can very well go up to that next resistance level, which is another 9%. However, you guys were able to at least take advantage of that 6% move, or that 3% move that we saw here on Monday, and the 6% potential move up until that 180-day moving average. The reason, pretty obvious, we saw the earnings report come out that acted as a negative catalyst, and it ended up dropping in price. And now, since Starbucks is, obviously it's a very sustainable company, and it's going to be consistent and it's going to be growing. If we zoom out on the big picture, we can see that, it doesn't stay at these price levels for too often, especially when we dropped after earnings. We were at 104, and we haven't seen those price points since basically March, right? So that's been like a year of growth that we just wiped out, right? So I wouldn't be surprised to see this recover, at least even until 119, 120, right? Just because we've been trading in this horizontal channel. So this level right here was definitely a support level, and that acted as a support. We had that support back in March. So we ended up finding a bounce there, and then we ended up recovering. So that's why we were paying attention to it on Sunday night for today. And not saying that we are completely gassed out for the move to the upside. We might be a little bit, we might consolidate a little bit before moving higher. But I don't see this dropping anytime soon. So if you were looking to get into Starbucks at any point, this is probably a good opportunity for you if you missed it a year ago, right? So that's what we're looking at with Starbucks. The next one that we're taking a look at is going to be Twitter, TWTR. Twitter here, very similar setup, drop after earnings. And then so we ended up coming down to the support level here. And so we've been holding that support level. Fairly oversold. We've been oversold here on the RSI. MACD, we just started to see a change of color, and it looks like we are starting to break above this blue line, which is the EMA, right? Once we break above the EMA, that indicates that we have positive price action happening, right? Combine that with the MACD and the RSI, we show a little bit more momentum. Once again, we haven't seen these price levels that we're currently at since basically May of this year, right? Also about 6 months worth of data that we ended up wiping out. We have been once again trading horizontally on this particular stock as well. We do have quite a bit of room. Once again, 180 is going to be the first level that we're going to be watching. So that is approximately, let's see, today we posted up 3%. And then if we recover to the 180-day, that's another 15%. Just to the 180-day. So that's the profit potential. Obviously, we can move higher. We've got the critical profile level here at 68. So if we recover to that, we're looking about 26%. And then we have a resistance level right up here, which was probably what we would test if we come that high. So that's 33.44%. So once again, Twitter also not going to go anywhere. And that is a fairly strong resistance level right up here. We also have another one right over here at pretty much the volume critical volume profile level. So that's going to be the first level we test, and then the second one's going to be up there. Obviously 180 days is going to be the initial level that we're going to be looking to capitalize on the way up. So once again, same setup, negative catalyst on the earnings, and now we're starting that recovery. So that's what we're watching on Twitter. The next one that we're going to be taking a look at is going to be Visa. And notice that these companies are very significant companies, right? They're not penny stocks. They're companies that are going to be around for the next 10 years for sure. I don't know about 10 maybe, but 5 years for sure, right? Probably 10. I wouldn't be surprised unless something, crazy happens where they disappear, but I wouldn't be surprised to see them around for a very, very long time. So they're consistent, they're strong, and I wouldn't be too worried about investing in them, even for the long term, right? Same exact setup as the last two. We had a drop on earnings, and now we're starting that recovery. We're testing this EMA to break above it. We're still fairly oversold here on the RSI. MACD, we just initially started seeing a change of color. So from current price points, we're going to be looking at a recovery to the 180-day moving average, which is this green and yellow line, 6%. That aligns fairly well with the critical volume profile. And that would bring us back to around the general area that we were in. So I wouldn't be surprised to see that. That's 6% of a recovery, 5.76 to the 180-day, about 8.25 to the critical volume profile level. And we've been basically trading horizontally. If it makes a full recovery back to those all-time highs, we're looking about 18.38%, right? As far as the risk goes, we're probably going to be testing this level right here at 205. So you have a risk of approximately 2.54% down to the support level. And that support level is held up by basically March levels down here, right? So we formed that support level back here, and we dropped down to that, tested that, and now we're starting a recovery. So that's what we're watching with Visa. The next one that we're watching is going to be Pinterest, P-I-N-S. Pinterest. We are still anticipating to see the earnings report, and that's going to be on the 4th of this month. So be prepared for that. We did see a drop just not too long ago. We talked about what happened with Pinterest last week. So if you guys want to know why we saw the spike, check out the video from last week. And then we ended up seeing that drop, right? So earnings, the reason this is catching my eye is because if we look at the big picture, we have been seeing a bit of a decline happening. However, big picture, let's go ahead and go to the daily chart. Big picture, Pinterest hit 89, right? And so at this price point, we haven't been at this price point in a very, very long time, since basically last year, right? So we're at a very, very cheap price point for the stock in general, right? Not to mention, we are starting to curve here on the daily, on the RSI, we're starting to curve to the upside, as well as the MACD. We haven't started seeing a change of color on the daily, but let's go ahead and go to the 4-hour chart. We did start seeing a change of color here on the 4-hour chart, and a move to the upside here on the RSI, as far as being on the oversold side. Like I said, we do have earnings here on the 4th. So as you guys know, if you guys are part of the team, you guys know that we try not to trade anything, or we set up a very, very strict risk to reward ratio prior to going into earnings if we are trading that particular stock. However, for the most part, we try to focus on trading post earnings, because like you guys saw with the last few stocks, we never know, even if it's a positive, catalyst, or even if it's positive news, it might act as a negative catalyst and drop the price, right? So we try to trade after earnings to see and follow the trend that earnings gives us, right? So same thing with this. I would personally wait after earnings before jumping into this, or if you do jump into this prior to earnings, I would have a very, very tight stop loss in case this does go south. We are basically 40% or 50% down, because we were at about 89 back in February. So a recovery for that would probably be about 50%, right? 49.83%. to recover to those all-time highs that we were at. However, we are at new all-time lows, right? So we are at quite of a deal, right? So definitely one to consider and add to your watch list. Very attractive in terms of the RSI and MACD setup. As far as the price point goes as well, we are basically at that -1 standard deviation. We have a critical volume profile level right up here at 60. So if we recover to even the critical volume profile level, we're looking about 30% recovery. And that's about the same resistance level that we got rejected at after this little spike. So that's why we're watching Pinterest, but definitely consider that we have earnings coming up on that. And then the next one we're watching is AA, and that's Alcoa Corporation. We did to a degree. We had a positive catalyst here on the earnings report, and then we ended up seeing a sharp drop after we hit that positive one standard deviation. We ended up dropping down below the 180-day moving average. And the reason this one is very interesting and attractive is because we do tend to hold above the 180-day for the most part. And right in the last basically week, we ended up seeing this drop right below. In my opinion, I do believe that this is more so of a fake out than anything to the downside, just because we are very consistent over the last year to the upside. So I would anticipate that this does recover. I wouldn't say to those all-time highs, not that it can't, but it definitely can. So at least to those previous highs, so these levels right here. So that's about 10% that I'd be looking at here with AA. Let's go ahead and zoom in a little bit closer. We do have plenty of room to run here on the RSI. MACD, we're still green, not purple, meaning we are still in that positive bullish momentum. So even a recovery from current price points to that 180-day moving average to 6.61% to those previous levels, we're looking at about 10.22, 11%, and those all-time highs we're looking at about 19.98, almost 20%. Looks like we didn't make it all the way to the -1, but we are probably at -0.5 standard deviation, which also acts as a level, right? And based on the history, we do consistently keep on posting higher highs on this particular stock, so that's definitely something that I'm considering and looking at for an opportunity this week. The next one that we're going to be looking at is going to be Amazon, and this is going to be the last one that we're going to be talking about this week. Amazon, currently at a support level. We did have earnings act as a bit of a negative catalyst. However, for the most part, we've been trading sideways here on Amazon for the last few months, basically since September, the end of August, September, October. We've been basically trading sideways, and currently we're basically at the bottom of not only the critical volume profile level, but we're also at a support level. We're not super oversold. However, we are closer to the oversold side than the overbought side. So I wouldn't be surprised to see this recover at least until that next resistance level, which is another 4%, if not the next one above that, which is 6.34%. I would say we are at quite a bit of a deal here with Amazon, and that's not even all-time highs. But as you can tell, over a longer period of time, Amazon has been growing for the most part. We were about last year, we were about 3,122. Currently, we're at 3,318, posted highs of 3,773. We saw Amazon, we saw Tesla pump really hard. So I wouldn't be surprised to see this increase significantly over the next year or two. So if you're looking for a longer term play, that definitely is it as well. But in the short term, I would say we are at a fairly safe level, taking into consideration that we are potentially going to have a little bit of a pullback on the SPY to test that bottom channel trend line. I would say we might drop down to this next level of support here at 3,170. So I wouldn't go all in here in terms of, if you're looking for your entire capital, but I would definitely consider this, or at least watch Amazon as a potential opportunity throughout this week for at least that 3.974% move, if not that 6.28% move. In terms of this week or next week. Earnings, we did have that negative catalyst. However, it could have been a lot worse. And since it didn't, and we are starting to consolidate, it was basically just another day in the market here for Amazon. So that's the stocks that we're watching for this week. If you guys have any stocks that you guys are watching this week, drop them in the comments below. If you guys found any value in this particular stock talk, make sure to smash that like button, subscribe if you're not subscribed. Drop the comments, whatever you guys are thinking about in terms of what we talked about this week in this video, or if I talked about something that you guys weren't watching, or if I didn't talk about something you guys weren't watching, mention it in the comments, and I'll see you guys in next week's Stock Talk video.